Hey, Sean, thanks for joining us today. So, we are several weeks out from the Ethereum Merge, which is set to take place around September 15th. And like any big event, traders want to take advantage of the opportunity. This is no different. So, in this week's Crypto Weekly, you outlined several ways that traders were positioning ahead of the Ethereum Merge. So, could you give us a little insight on those?
Yeah, so last week we discussed a couple of alternative strategies that traders are employing ahead of the merge. Obviously, we are long ETH into the merge. We think that it's going to be a positive catalyst, and ETH should outperform the rest of the crypto market in the latter half of this year. However, it's not lost on us that there's still a lot of residual macro risk out there. And so these two strategies could be interesting opportunities for people that wish to hedge against macro risk. The first is the delta neutral, or we're calling it the fork trade. So right now there's a lot of momentum behind the possibility of a forked proof of work ETH chain. We'd be getting into technicalities, but technically it would just be the current ETH chain continuing with proof of work mining, and the new chain would actually be the fork chain. But the moral of the story is that people that hold ETH in their wallet would essentially be airdropped this new token for the proof of work ETH chain. This dynamic is very similar to how Bitcoin holders a few years ago during the block size wars were airdropped all of these Bitcoin fork tokens, think Bitcoin Cash, those types of tokens. Investors can be long spot ETH, hold ETH in their wallet, but short the quarterly futures contracts so that they're inoculated against any macro-driven movements in price. Obviously, you miss out on upside in addition to protecting your downside here. But the idea is that you can just farm this airdropped fork token in the event that it actually happens, and you're more or less farming this free money, so to speak. Obviously, there's risk that that fork does not occur, and there's also risk that it's just worthless at the end of the day. But that is one strategy that people are employing. We can see that in the futures curve right now. So ETH futures are in backwardation, showing there's a lot of demand to short ETH futures and put on this trade. And the second strategy that a lot of traders are putting on right now is just longing ETH BTC. And so in a similar spirit, if macro factors force all risk assets lower, but ETH on a relative basis outperforms, then the ETH BTC trade should be profitable.